Now for our feature story of the day, fam. Bitcoin to 1 million per coin by 2029, fueled by the ETFs and government demand, according to the Bitwise executive. Let's break this baby down, shall we? As you can see here in the headline. So that's what's up. Bitcoin's expanding their institutional adoption as the institutional FOMO like a mofo continues, which may provide the structural inflows which are necessary to surpass gold's market cap, which is currently sitting at 22 trillion. And Bitcoin right now is just above 1.9 trillion. That means we got a 10x incoming, baby. That will send the Bitcoin price beyond 1 million. Couldn't agree more. In yesterday's pod, we discussed Arthur Hage's Blaze projecting Bitcoin reaching 1 million by 2028, which I personally think is more probable. Let me know your thoughts. Quoting him here, our in-house prediction is 1 million per Bitcoin by 2029. So that Bitcoin will match gold's market cap, 22 trillion in total addressable market. Let me know if you agree. I think if we hit a 22 trillion market cap, we'll be well above 1 million per coin, potentially 2.2 million, which is Max Kaiser's target. But you guys, let me know your thoughts, yo. Gold is currently the world's largest asset, valued at 21.7 trillion, and it recently hit a new all-time high per troy ounce of roughly 3,500 before correcting some. In comparison, the Bitcoin market cap today is just 1.9 trillion, making it the 7th largest asset globally. And here you can see the chart from companies' market cap data. Gold, 21.7 trillion market cap. We got Apple, 3.192 trillion, Microsoft, 2.93 trillion, Nvidia, 2.6 trillion, Amazon, 1.9 trillion, Google, 1.9, and then we have Bitcoin just shy. What's going to happen when Alphabet / Google, Amazon, Nvidia, Microsoft, and Apple all put Bitcoin on the balance sheet? You do the math. But anyways, for the 2025 market cycle, Bitcoin may surpass 200,000 in the base case. Couldn't agree more. It will, I believe. And 500,000 with more governmental adoption. I dare say 1.1 million in play, but quoting the analysts. But once you see sovereign bias, like the U.S. government stepping in, all this will change to 500K. Send it. So the base case is 200 G's, conditional on the U.S. government not stepping in. If they step in, we'll move closer to 500 G's, says the analyst, referring to the U.S. government's plan to potentially make direct Bitcoin acquisitions through the budget-neutral strategies. We already know that's a fact. The entire Trump administration talks about it virtually every day. And you already know Michael Saylor delivered like a 100-page report to the government on budget-neutral strategies for acquiring Bitcoin, whether it's printing money out of thin air or whether it's trading their gold derivatives virtually for the Bitcoin. Now, my understanding is the Fed prints the money. There's no congressional oversight, and we're still responsible for the interest. So I don't know if that's the most viable solution when they can just trade the gold derivatives and trade the inferior asset for the apex predator. After all, gold is the poor man's Bitcoin, quoting the high priest, your holiness himself, Max Kaiser. So the U.S. is looking at many creative ways to fund its Bitcoin investments, including from tariff revenue, and by reevaluating the U.S. Treasury's gold certificates, creating a paper surplus to fund the Bitcoin reserve without selling gold. I think that's their most viable way, in my humble opinion, because there's so much gold that can just be transferred into the apex predator. And that's according to Bo Hines, the Presidential Council of Advisors for Digital Assets. So I like to believe he knows a thing or two about a thing or two. What are your thoughts? Now, the U.S.-based ETFs have surpassed all expectations during their first year of trading, exceeding record trading volumes as IBIT became the fastest-growing ETF in history, and they now have over 600,000 Bitcoin achieved in virtually 1 year. So it's insane. At this rate, they'll have millions of Bitcoin before you know it. The first year is usually the slowest for the ETFs, and that's a good point, highlighting the launch of the gold ETF. That alone implies that in the second and third year, we'll see growing inflows. And in terms of the 4-year cycle, implies that this cycle will be prolonged by the structural inflows. The Bitcoin cycle may also be prolonged when the U.S. wirehouses start gaining exposure to the pre-low biddy and the ETFs, quoting them here. In the U.S., the major distribution channels go via the wirehouses, which are essentially the big banks. And speaking of the big banks, shout out to Big Mike. He has a podcast. Let me know if you've ever tuned into it. Shout out to the Obamas. And not even half of these wirehouses have opened up their distribution channels to the U.S. Bitcoin ETFs. Adoption from the U.S. wirehouses may bring a huge amount of capital. No, they will bring in a massive amount of capital, since these control over 10 trillion worth of consumer assets. That's 10 trillion heading into the pretty little bitty going up forever, Laura. And if you don't know, now you know. Let me know your thoughts surrounding Bitcoin to 1 million by 2029. million as per Bitwise head of research, or 1 million by 2028, or even potentially 1 million this year in 2025 as per Samson Mao. Let me speak to Samson. Max Kaiser's calling for 2.2 million in play. But you guys let me know your thoughts. Welcome everyone to the Q&A segment of the live stream.